Hello, hello. Welcome to Ready Set Live. How's everybody doing? Where are you guys coming in from? And how are you surviving today? Let's hear it.
Good afternoon, boys and girls.
All right. This should be a good one, guys. It's been an interesting day. I think that's an understatement. Woo. Gonna
All
warm up
right,
the stream here.
let's see, who do we got here? We got Luke, we got Damien, we got Lewis or Louis, Crypto Darth Mark. Hey, how are we doing out there? Rizo Pac-Man, Canberra, Australia. Good to see you guy. This is Corona
Corona.
Central. There we go, Luke. Nice. Hey, Lewis, Louisiana.
Wow. Yeah. It's
Been there many
everywhere's
times.
Corona Central right now, I think.
Escondido, California. Hey, John, how you doing? Good to see you. San Francisco.
Yeah, that's definitely got its fair share.
We got a Kiwi on board. Awesome.
Middle Earth. There you
go. There we go.
Yeah.
I wonder if he's Shire or
Yeah.
Should be Gondor, right?
Puppets.
Great day for option traders. Anybody got a spare toilet paper? Yeah, we're doing an auction on hand wipe. So welcome aboard, everybody. If you're just joining our channel, this is Ready, Set Crypto. Every week we do a little session called Ready, Set Live, where we talk about the markets. We talk about where we are with the state of crypto. Always something interesting to talk about. This week is a little bit different because, well, I guess the last month or so, because the larger markets, which really still dwarf cryptocurrency by a huge amount, right? They're having a fit right now. And if you haven't looked outside the door, if you've been asleep for the last month or something like that, we
or
have
quarantined.
we have the major markets are down about 20% right now. So we are just creeping into bear market territory, which means that the fun is just beginning because it's always the first move is what I call the shot over the bow. And that's meant to get your attention. And then it gets interesting after that. In a true bear market and a true recession, the worst selling is always at the very end. We just got started, guys. So don't let that scare you away from seeking opportunity in the market. However, I think as we go into today's session, you have to have a different attitude, different mindset, different skill set to be able to survive in a market like this. Anybody can survive in a market like 2017 where it just creeps up every single day, but this is not going to be one of those. You're going to see unbelievable rallies. You're going to see soul crushing sell-offs. And all during that is going to be movement. And so what you have to learn to do is to take your head out of the game and just trade what you see and not what you think nor what you want to happen.
Well said. Yeah, I I think it's definitely a day where we're watching some things change before our eyes, and it looks like Bitcoin is handling it pretty well right now.
Yeah, I'd have to say cryptocurrency overall, especially Bitcoin, is handling the fear, uncertainty, and doubt, being ladled out of there with a huge spoon at this point. So, Mav, you got things to talk about, or do you want me to start off with the charts first?
Yeah, I think let's look at the end of the equity close for the day, and yeah, I think it's today's just looking at the percentages, looking at BTC versus gold versus some of the major indices, some really interesting stuff.
Okay, let's fire up a little bit of price discovery. What do you guys say? Okay, so this is just the daily chart of the S&P 500. Mav, I'm assuming you can see this okay.
Yep, yeah, I got it this time.
Okay. Okay, so what we're looking at is all the way down here. And so today closed off of the lows, but we probed a little bit lower. Now, this is not always the true story because what you have to look at is also the S&P futures, which trade about 24 hours a day. So what a surprise. And so what we're finding is that this is right around the 20% level. The price keeps banging, banging, banging on that level. And so far, somebody has been buying into the end of the day. Now, yesterday, we had a really interesting candle. If I just go out to like the spiders had this is what is called a hammer candlestick. All right, so I'm going to zoom in on this dude here and blow him up for you. This is a hammer candlestick. So for those of you that understand what's going on with candlestick, Japanese candlesticks, this is where the price started out here for the day and got drubbed all the way down to the bottom and then rallied all the way into the close. And that's a very bullish candlestick. It is a 1 day reversal bar. However, if you talk to the people that teach Japanese candlesticks, there is no such thing as a 1 day reversal bar. It always has to be confirmed by what happens the next day. In my experience, what I've seen a lot of these hammer candlesticks near the bottom, but there's always seems to be a nasty move right before it actually does reverse. It's almost like there's a big sign that goes out that says, "Abandon hope, all ye who enter here." And this is where people just finally say, "I can't do this. I quit. I fold. I capitulate." So a lot of times we'll see this type of pattern where we get a hammer candlestick and we get some kind of nasty, ugly, bearish candlestick like today, and then the thing takes off. Now, why I'm talking about the S&P 500 is, again, because it dwarfs every other market that's out there. This is the biggest market in the world essentially right now. So everybody is watching this and everybody's looking at this as a barometer of where they should put their risk capital. And as a result of that, so goes Bitcoin. So a lot of people have bought into this notion that, hey, if we want to hedge, then Bitcoin's a hedge against a global recession. Well, that's true. And that may be true down the road. But one thing that we found, and let me show you an example of this, is and here's a weekly chart going way back to probably before a lot of you were born, and this is the S&P 500. And so what we're seeing is, this is that move, just a couple of weeks, that's all, and we've already lost 20% of the value of the most important index in the world. And as a result of that, Bitcoin's only gone down just a few percent off the recent highs, which is good. Now, what I want to bring to your attention here is I want to show you what happens when we truly go into recession. This move here from 2007 to March of 2008, that was 20%. That's the same thing as this move here. That 20% is smaller because obviously it started at lower numbers. Notice the rally here that gave us the monthly lower high. That's a monthly lower high. And then it got ugly, 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 ugly. So this is why I'm saying things could be just getting started right now. Now, the last time that we went through a perceived pandemic was Ebola back here. And that V bottom, that went down 10%, and it V bottom like crazy as people realized that we overreacted to it as a society. Now, I'm not going to make that judgment right now. I don't think we really know, but right now it's starting to get to the point of where people are just canceling because they don't want to be the one person that doesn't cancel and puts people at risk. So it's almost turning into this amazing perfect storm right now, which we rarely see. So notice also this trend line. I think at some point we are going to find some support down in this area, at least on the initial swing down, if not today. And then we're going to see an unbelievable bounce, which is going to convince 99% of people out there that it's all over, it's all done with. And I think at that point, that's when things get really interesting. For those of you that understand chart patterns, You can also see what is beginning to build here, which I think this is a good chance for this. This is going to be the head and shoulders from hell if this happens. So this is all part of the plan here. If we do rally off the bottom up to some intermediate high, maybe around 3,000 and roll over again, there we go. We've got basically a target, which is going to be about 800 points high and is going to put us down somewhere to this level here. So that is a tremendous amount of wealth destruction happening if that's the case, if that's what happens. So this is where Bitcoin can become, if we run into a deflationary environment, this is where Bitcoin can be a real asset going forward. Now, so things are just getting started here with all of this analysis. Just a couple more things to show with you guys. Part of the uncertainty is obviously the presidential election, which is coming up. As of 2 weeks ago, I think everybody had just basically mailed in the fact that Trump was going to be the incumbent. There was no way to beat him. But guess what? He owns this lock, stock, and barrel. He owns everything about the coronavirus. He owns the economy, whether or not it goes up or down from here. He owns everything into November. So if you look at this is FTX. FTX is actually discounting the probabilities of him being reelected, as well as every other candidate. Now, a couple of days ago, this actually went down to 30%, but right now it's about unity. It's about 50%. And so this is the handicapping that's going on right now. If we look at, oh, come on, there we go. If we look at Sleepy Joe, he's running right around 50% or so. And then Bernie did not have a very good day yesterday, so now he's down about 1%. Now, here's my thinking too, is that, and maybe this is going a little too far for today's commentary, but it almost seems like Ms. Rodham Clinton is hanging out in the wings, waiting for one of these guys to fail. She's going to step in at the last minute. Don't be surprised for anything to happen between now and November, considering politics in the United States. Okay, let's see if there's anything else. So I talked to you guys about how bear markets move. People basically overreacting at this point. The bottom will be reached in capitulation. The last thing I want to mention, you guys, and let's go ahead and bring up the crypto charts. Oh, by the way, so let's bring up Bitcoin here. Don't be in a rush to jump into this. Don't be like, oh, there's 8,000. Let's jump into this thing. We don't know where the bottom's going to be. Take your lead off of the larger markets. Take your lead off the larger markets that are getting crushed right now. So if you look at things like the 10-year note, 10-year note is actually starting to recover a little bit, which may be slightly good. The bond market, let's try this one more time. The bond market is crashing at this point. So everything that got bid up is crashing back down. That's a little bit of stability coming to this. Okay. But take your key off of the larger equity markets, take your key off of Bitcoin. Don't be too hasty jumping into the altcoin of the week thinking that you're going to get a bargain, because as we know, what goes down can continue to go down. Wait until you get a weekly uptrend on the asset of your choice, and then you can buy it with both hands. But wait, be patient, wait for the trade to come to you. Okay, that's all I got for right now. I'm sure I'll be bringing up the charts to answer your questions later on in today's session. Back to you, Mav.
Awesome. That was really good. Yeah, it's cool to see where we're oh, as sort of this narrative develops throughout this year, just the dynamics, I suppose, between stock markets, bonds, Bitcoin, gold, all of that becomes extremely relevant for us to try to, yeah, I don't say like go back and forth between all of them because you don't want to be playing that over and over again. But there is there's with uncertainty, people are looking for safe havens, or not even safe havens, just some way to stem the tide of just massive bearishness right now. So I think it's a good segue into some of the stuff I want to talk about today.
No, the one thing I want to say before we get into your stuff
Yeah.
is that what you're going to see in this week and next week and the week after that is for all the Johnny come latelys that have just gotten into technical analysis and they've made a couple of good calls based on a moving average bounce. Right now, you will not find technical analysis working because it's a study of what worked in the past applied going forward. So you're trying to linearly extrapolate going forward based on what's worked in the past. What I'm saying to you right now is like we're entering uncharted territory. And so this is that 5% of the time that standard trailing indicator based technical analysis does not work. So if you've got people out there that are making financial decisions for you based on what a trailing moving average is doing, or hey, it always bounces off the 339 exponential moving average, like give me a break, guys. It is all down to price and volume. This is all price discovery. This is all animal spirits and fear right now, and that is not going to be captured by some trailing study. So, with that, I will pass it over to you again.
Yeah, it's kind of interesting. I think even guys like Warren Buffett right now are feeling the pain. He lost over 28 billion last week, and he's heavily in bonds right now, which are also getting crushed.
Which are
So
getting destroyed right now.
yeah, so I wouldn't say anyone truly understands where we're going or what's happening. Best we can
Price
do
will
is
move in the direction of the pain.
yeah, exactly.
Price will always move in the direction of the pain. And this is why people seem to think that the market's got it in for them because it personalizes the attack. Guess what? It's you and 5 million of your closest friends are in the same exact trade. And that's why it's going after you because price moves towards the pain.
Yeah. Yeah, definitely. So, all right, let's quickly run through this little death by PowerPoint, a little bit of pain, but hopefully it'll be worth it. And if you guys could do me a favor and smash that like button. Oh man, I sound ridiculous saying that, but let's get some more people in here. It's always fun to have a little bit of a bear party. But yeah, let's talk about what's going on in the markets real quick. So obviously today was a little bit crazy as we saw, the World Health Organization declare officially that the coronavirus outbreak is a global pandemic. Shouldn't be really news to anyone. Was pretty much already priced in as far as our expectations, but still, it is at this point, the seriousness of it is staring us in the face, and I think where things go from here is that's what people are trying to speculate on, but at the same time, there's just a lot of fear. There's a lot of uncertainty, and that's pushing things further and further down. And it's just, as Doc talked about, it's the perfect storm that is going to continue to, weigh heavily on the market. So there's, yeah, I think there's some lessons we can take from this, but the thing we need to know is that we are officially in a bear market at this point. Now that we've crossed over, certain thresholds, now that we're just moving in this direction, it's very clear to us that this is the new normal. Will it be short term? Will it, have a year long lifetime like we saw in 2008, and then maybe have some volatility and move back into being in bullish territory after that? Nobody knows. This is what we have to do is respond to what we see today, and what we see today is lots of uncertainty, lots of economic indicators going off the rails. Just there's every reason to be bearish right now, and there's every reason to be just trying the best we can to keep ourselves from getting the worst haircut possible. So, to that end, I think there's some lessons or guidance that will be necessary moving forward. So, I would say, as it relates to where the market goes, where we go as individual investors in this day and age and times like these, is that the majority of your lifetime investments will be determined by decisions that you make during a small minority of time, and this is certainly one of those times with high volatility events, lots of just things going on in the markets right now. There are opportunities even in the darkest of days, because spoiler alert, I think we implicitly know that there's going to be a recovery of some kind. Maybe it won't look like it did, going into this year. Things will change. We will see a new environment that's defined by different rules, but in general, the markets will go back up. If you look at the 100-year history of the U.S. stock market in particular, had you picked any random day since 1926, your returns for that day would be 54%. You just, throwing a dart at the board. If you looked at any random year long period, your returns become 70%. If you look at any 10-year period, your returns become 90%. And any 20-year period, it's over 100%. So the point is that, yes, times like these are scary. Yes, times like these are uncertain. But over time, the market does go up. So, hopefully that's something you kind of contrarian to, everybody looking at this like the end all be all. But at the same time, we can't truly speculate what's going to happen down the road based on past results. Things will be different. So we have to keep that in mind. So one or 10 things rather to keep in mind is that there are some lessons that we can take going into this land of uncertainty. This is definitely like the Super Bowl for financial advisors because they're able to, they thrive in times of uncertainty like this, and when people are fearful. So don't try to be a financial advisor if you're not one. Just try to do your best to protect yourself. Your retirement plan probably isn't going to change. Yes, there's some things we have to weigh now, but I don't think that major things have changed regarding how we save for retirement or how we're putting aside money. Many of these points are really just trying to get you to realize it's going to be okay. it's, there's changes happening right now, but they're not the biggest changes. Not everything is going to change, and in a couple years, we'll look back at this. Yes, that was an opportunity, but overall, things mostly remain the same. So that's hopefully what we can do, just to not panic and stay on track and look at this from not a place of emotions, but rather rationalization, to look at this with logic and protect ourselves as best as possible. I would say some other things we need to be asking right now is regarding some of the information that we're looking at. Where are you getting your information? Is it reliable? Who are you listening to? Who do you trust? In this time of uncertainty, but also lots of misinformation, I think it's very pertinent for us to continually be very skeptical of a lot of these things we see on a daily basis and not to make judgment calls based on the opinions of other people all the time. We have to be protective of our own, you know, we can't let other people dictate our investment strategies all the time because it's our investments to protect. So I would say it's very, very good idea to just continually be skeptical, be contrarian, and look at things from a different perspective, or at least try to see both sides of it. So I think that's where we kind of see a lot of as the market sells off and lots of uncertainty in the market. For us to look at that from a different perspective and say, okay, where do we find opportunity? How do we find value in a market that's right across the board, and how can we better anticipate where things are going? So that's I think something we constantly talk about on this channel is how to be just look at things and say, okay, can we come from a different perspective, or how can we develop multiple viewpoints on this sort of topic, and how can we profit from that? So a couple strategies I think would be, pertinent in a bear market and during times like these is to employ things that are either conservative or help you play against the tide. So one of those is modern portfolio theory. It's very conservative. It's essentially, using just your ability to hedge the market through buying the entire market, essentially. So not having to be subject to the whims of individual stocks or small portfolios, but rather more of a all-encompassing just holistic approach. And yeah, it's not the most exciting thing, and Doc doesn't really like it very much. But during times like these, this is where we develop risk tolerance. And if we have a very low risk tolerance, if we are trying to be ultra conservative, using strategies like modern portfolio theory, where we're balancing and rebalancing based on our, how we've allocated, based on our risk tolerance, the difference between stocks and bonds in our portfolio and just other assets, we start to be able to better weather the storm than people who are, more exposed to risk, more exposed to uncertainty, more exposed to the volatility in the market. So, yeah, modern portfolio theory maybe is not relevant in times of extreme volatility like this. It certainly doesn't make a lot of sense to be, throwing money into a fire, it seems. But at the same time, it will help you in the long term to survive moments like this. The second strategy is to buy short and long term puts. So, for those that don't know, a put is an option that represents rights for 100 shares and has a fixed time length before it expires and a specified price for selling. Because options increase or decrease by much larger percentages than stocks, even a small number of put contracts can offset you for long stock position losses. But this is extremely risky and should only be done with experience. And if you don't know what you're doing, I would put this one to the side. This is definitely where you want to make sure you're not eating your own lunch. You definitely have capital preservation methods in place. So Doc can definitely talk more about option strategies, but this is definitely something that we're seeing in times like these where you give yourself a little bit of buffer by using puts. And so that kind of feeds well into strategy number three, which is to be selling naked puts. So selling a naked put puts involves selling the puts. Wow, lots of put words here uh, that others want to buy in exchange for cash premiums. So in a bear market, there should be no shortage of interest buyers. And when you sell a put contract, your hope is that the put expires worthless or above its strike price. If it does, you profit by keeping the entire premium, and the transaction ends. So again, this is a little bit of a strategy to help you better give yourself a buffer for making sure that even during times of volatility and uncertainty, you have something in place to act against that. It's not a totally risk off approach. Options are definitely very much a risk on strategy and have to be weighed as such. But at the same time, they help give you better tools and better methods to act against that uncertainty. So it's definitely something to consider as the markets continue to be very volatile. The last strategy I want to talk about is just defensive positions. Again, this is not very exciting. Honestly, lots of bear market strategies are going to be very, definitely don't have the same sort of appeal that we see during bull markets where, you could be throwing a dart at the board a lot of times and you'd be doing okay. The not so with bear markets, you have to be much more intentional with your allocation and much more impactful in terms of where you're putting your capital. So that's where we have to look and seriously analyze from a fundamental sense where the markets will likely go or what industries or sectors are going to better weather the storm. So this is why Doc was just talking about how technical analysis is not really good in times like these, but this is a great time for fundamental analysis to say, okay, what is going to survive? What is going to thrive in a market that has uncertainty, in a market where, just in time manufacturing is dying right now? It's a really hard time to be a business with a complex supply chain. If you are a business that's very over leveraged, you can't survive a couple months of negative or, just even smaller revenue. So there's going to be lots of businesses filing for bankruptcy. There's going to be lots of pain in, restaurants and airlines, uh, construction, etc. It's going to be really tough for some of these major industries that are reliant on a thriving supply chain and an engaged consumer activity to survive and do well. So we definitely do not want to be exposing ourselves to the risk that's inherent with that. We'd rather be exposing ourselves to where consumers are trending to, where are people spending their money right now, because they're definitely spending less of it, and as more businesses go through bankruptcy, there's going to be less and less, capital in the system to be spent. But I would argue that it's during this time, especially when people are, staying home more, when they're not going out as much, when they are, more participatory in e-commerce and digital economy, that it's tech stocks. It's, something that is reliant on a digital medium to, basically exist or thrive. These are where we're going to see some really good, maybe not gains in the short term, but certainly they're going to weather the storm, I think, better than some of the other ones out there. Uh, there could also be an argument for real estate or just some harder assets like gold and silver and commodities that may do a little bit better over the long term. But it's definitely something we want to continually weigh and just make sure that we're doing the best we can to anticipate where the storm is currently at its worst and where it's going. But yeah, I think it's very on us to look at this and say, okay, where we are, where we're going, and why is that happening? So yeah, very, I guess, conservative plays here, but this should help you better weather the storm, better anticipate where things are going, and just try to do your best to protect yourself. So before I turn it back to you guys and some of your questions, I think two of the thoughts I have right now regarding sort of the macro market and where things are going is that first off, the virus spread and the economic downturn will get worse before it gets better. That's just clear from every possible angle we could be looking at this right now. And it's going to probably be longer than we want before the dust settles. And certainly, this is not something we want to be hearing at the end of, well, not the end really, but after 3 years of a bear market in crypto, certainly, I wish we had better news. I wish that we had the continually appreciating market going up into the halving like we were hoping for, and that things were going to kick off and it was going to be fun. Yeah, not going to be the case anymore. However, as we've often talked about over and over and over on this channel, it's these externalities. It's the larger market that enables crypto to really thrive, to really come back and really find a new voice, a new way to appreciate value. I think what's been clear to me over the last, since 2018 is that the larger markets should have gone into recession then. But unfortunately, we just saw more and more of this, fiscal policy step in and prevent the inevitable downturn. And it just really thinned out the system so that it even just uh, something as like a pandemic or some uncertainty like coronavirus, this was enough to be the pinprick that burst the bubble, and it's we're seeing just this snowball effect of this economic virus spreading around the world, businesses closing, countries having a harder and harder time of keeping their economies afloat. It's bad, but at the same time, this is where we see the opportunity we've been waiting for digital assets. There's just going to be more and more I would say demand for a digitally native currency that lives beyond borders, that is not subject to these runaway inflation rates or negative interest rates. It's not going to be locked within borders. It's going to live on the internet because that's where it was born. And as people are increasingly going to the digital medium, that's going to drive demand. You can't spend cash if you can't leave your house. So it's definitely a time that we're seeing a lot of factors really play well into the favor of digital assets. Surprisingly so. This is I I certainly couldn't have anticipated all these sort of planets aligning like this, but I think this is going to be what really drives demand for this space, other than obviously the narrative of being an alternative asset class and being decoupled from the whims of central banks and things of that sort. But we're still growing up. There's still lots of maturity to make, so it's going to be uncertain. There's going to be lots of volatility all over the place. But I think it's nice to have sort of this expertise. We've been in a bear market for a couple years now. We know what we're doing. When we get a 5% haircut, we don't think much of it. So, yeah, I think we're better tempered for where the market's going and where it's already. So the second thing is that markets tend to bottom before the underlying event. So in this instance, by the time the coronavirus stabilizes, the markets should have already been off the lows. This is reminiscent of where we were in 2008 and 2009, and has things kind of recovered going forward. So honestly, I think it's going to be a couple of years before we see anything resembling a true recovery. And I hope that we address some of the underlying issues that really just delayed the inevitable going up to this point after 2008. But I'm not getting my hopes up, unfortunately. I think we're going to see more and more and more of this financial, fiscal policy that just kind of unfortunately exacerbates already bad conditions and encourages more and more of this debt to be over leveraged and to be just subject to the whims of small events that just balloon into much larger ones. So it's yeah, it's a little bit yeah, I'm not getting my hopes up for that. But at the same time, hopefully this promotes a new normal where the market's a little bit more rational on things. So great. Awesome. Before I go, I just want to quickly remind you guys that Doc just launched a book. It's awesome. It's 300 pages. And I would say fractal energy trading could be a really good way to look at this market and better anticipate where things are going. So if you want to check that out, head over to readysetcrypto.com/book. But now I will return to our lovely faces here and take some of your questions, guys.
I'm going to follow up on a couple of the points that Mab made here. Let's see. Are we off of the slide or?
Mm-hmm.
Okay.
Yep.
So screen share time as you guys pile your questions in. So before I do that, I just want to look you guys in the eye and just say, how do most investors perform during a bear market? And I think everybody knows the answer to this question. The odds are very poor that you will do well during a bear market. Most people do not do well. Most people lose money during a bear market. Why is that? Because a couple of things. First of all, they're following the advice of people on Twitter. If you're following somebody on Twitter who appears to be smart, guess what? You're now part of the herd. You have not separated yourself. You will go down with the rest of the ship. So you've got to do everything that you can to do the opposite of the crowd when you get into a situation like this. People are panicking. People are selling their portfolios into the lows right now, which is the worst thing you can possibly do right now. This is time when you should be looking to buy. So with that in mind, Matt brought up the idea of some puts. Okay. A couple of words that I want to talk to you guys about puts. Right, there we go. Here is the S&P 500. This is a different version of it. This is the SSO. And let me ask you guys, would you be willing to buy the SSO down here? The bottom of the 2018 market, would you be willing to buy it at $80 a share with it currently at 106? Guess what? You can commit to it right now. So right now at 106, if I can go out here to the option chain and with an option that's 37 days left, I can sell this dude for $500 a contract. I can be paid $528 for that contract for just 100 shares. So basically I get paid $528 to obligate myself to buy down here at 80. What are the odds that it's going to go past 80 and plummet further than that? Very, very low odds. So you're selling a put out of the money and basically you're getting paid for the pullback. It is one of the most fundamental, most solid option strategies, but it only works if you do it as the price is plummeting towards it, which is precisely when most people don't want to do that. The other thing that Matt brought up was buying puts as insurance. Where most people buy puts is down here, where the implied volatility is skyrocketing. You're paying a fortune for those puts. and it's very unlikely that they'll ever do anything other than expire worthless. Be different from the crowd. Wait till the price rallies up. Wait till the implied volatility deflates like a balloon. Buyer puts out of the money for cheap. And then if we do get a recurrence of the bottom, those things will skyrocket in value. So just simple things like this will make you a much, much better and much more effective risk manager and trader. And oh, by the way, over the next couple of years, you're going to be more likely to do well if you're quickly in and out of assets. So don't get married to them. This is going to be a very difficult time to be a buy and hold investor. This is going to be a phenomenal time to be a trader if you've got the skills. So, all right, buy puts on rallies only. If you want to sell puts, sell them into a death defying crash. Okay. Do the opposite of what the crowd is doing. You will do much better than the crowd if you do the opposite of what everybody else is doing, which is panicking right now. If you are Joe Cool and if you are taking assets at this time, you're accumulating, but don't look to hold them forever. Trade into the next bounce. Sell into strength, buy on weakness. Do what Warren Buffett does. The last thing I'll say is, considering something that Mav said, don't trust the media right now. Trust the price. Who determines what the price is doing? Institutions. Institutions pay billions of dollars to have the latest information. Who do you think is going to be more accurate? The price of the current asset today, right now, or the news media basically trying to get clicks, trying to get views? Always, always trust the price of any asset over the news.
Doc, would you say that going forward, options are sort of a better way to trade not only equities, obviously, but crypto? Do you think this is the time for crypto options to shine?
Well, it should be. I wish there
Yeah.
was a better answer to that right
Yeah.
now because we have had a couple of players dabble around with options. We do have Deribit, which is an excellent provider of options for Bitcoin and Ethereum. However, they have basically, you know, given us the old salute to those of us in the United States. So if you're outside of the US, if you're in the EU or one of the countries that they support, it's a very effective way to trade if you learn how to trade options. And this is a course that we did a little bit later last year. Now, there are other providers that are out there, little niche providers like LedgerX. Supposedly, the CME is going to get into options here. They are, but it's a question of whether the broker will actually provide them. So they have not as of yet towards me. So we're kind of in this sort of dark hole right now. The options market in the US equities market is 50 years old now. It's extremely deep, it's extremely liquid, and it's a necessity for people to use because who the hell is going to be able to afford to buy even 100 shares of Amazon anymore? There's been so much price inflation over the last 10 years. The stock market is essentially dead. The option market rules for the rest of the world.
Yeah, I think we'll. I mean, we've already seen announcements from exchanges like Binance, and I think we'll quickly see U.S. exchanges come online, such as Coinbase and Gemini and Kraken. Because that's what people are going to be demanding is more leverage and more ability to hedge and be playing against or finding ways to look at the market in a different sense.
Well,
Uh,
that's already flipped over in crypto futures. So
yeah.
right now, if you trade crypto for any length of time, eventually you will get into crypto derivatives like futures because you
Hmm.
realize that you get much better leverage. And actually, the liquidity can be even better in the futures contracts than they are in the spot, depending on what exchange you're at. So a lot of people have gone over to crypto futures. That's the way to go. And options will be behind there. It will eventually, that will be a vacuum that will get filled. And that edge will go to the retail trader as well.
Yeah, absolutely. I think if we can communicate one of our major theses that we often talk about on this channel, it's that as the markets, as fiscal policy, as the larger economy trends towards negative interest rates, trends towards more quantitative easing forever, helicopter money, all these just really desperate moves to inject some sort of economic activity into the larger marketplace, and just trying to get people to, it's going to push people towards risk. And in that environment, we're going to see more and more acceptance for the ideals, tenets, and just the market of cryptocurrency. We're going to see more and more demand for things like decentralized finance, lending, and trading. So DeFi is going to really come into its own in this environment of more and more risk. Risk is going to be what defines all strategies going forward. It's going to be more and more and more of a risk on environment. Unfortunately, things like T-bond, or like bonds, and the treasury notes and all these things, they're dead at this point as far as I'm concerned. Or you all, why would you be looking at a 30-year note right now that only has a 0.85% return on it? The only reason you'd be doing that is to give your capital some semblance of I guess security or safe haven. Uh, it just doesn't make sense. So it's going to push people more and more to get out of savings accounts and into more and more risk on assets. And that's just going to be the trend we see over the next decade for sure.
Lexus is asking if the bear market is still in crypto. I'd say we're still in a corrective market. Let me do this. Let's bring up Bitcoin on Bitstamp, and I'm going to go to a log chart, and I'm going to go to, and then I'll share my chart here. All right, so let's go out to this bugger here. There we go. All right, so this is what we've been in now for several years, is really this guy here. So this is a monthly logarithmic based chart, and what it does is a great job of normalizing the rallies and the corrections. So what you can see is that this is really just what we've been in since the end of 2017, is just this big triangle. That's it. Range expansion goes to range contraction, goes back to range expansion again. So right now we're just consolidating. It's still getting ready to get ready for the next move. And because of that, like, a monthly chart really is difficult to trade. A lot of us trade in smaller increments than that because we need faster outcomes from this. So you can trade within this, but you're seeing the volatility go really quiet. So the answer to your question is, this is still a corrective period. So it's a big corrective period. Once we get out of that, we'll go back into a primary trend. More than likely, it's over a 70% probability that that will be continuation to the upside. Okay.
Very cool. Awesome. You guys have any final questions for us before we get off? It's kind of a pretty quiet day. I think everybody wants to just
everybody's a little shell shocked. They
yeah,
just want to stay inside and curl up with their respirator.
right.
I'm kind of looking forward to getting infected. I think it'll be exciting.
Yeah, definitely.
Get it over with.
Right.
Well, I'm flying on Friday, so that'll be interesting. Probably the airport's going to be closed. Who knows?
It's a great time to fly.
I flew the anniversary the year after 9/11. I flew on 9/11, and that was pretty spooky. It's like the airport was just completely, there's nobody out there. And I was like, okay, what's the odds that, hey, let's do it again the same time next year? So it was great.
Humans are certainly creatures of irrational fears.
So Crypto Darthmark, you're asking about levels right now. If 8,000 fails, Yeah, it's right now. It's the problem is that Bitcoin itself is caught in this trap of it is a it is a low importance asset right now. Don't take that personally, anybody, but it's a low important asset in the grander scheme of things. When you've got the S&P 500 being worth $33 trillion, Bitcoin is just this sort of little flea that's jumping around and trying to basically go off on the momentum of everything else. So so goes the larger markets, and so goes the fear of what's happening with this. So goes cryptocurrency, because quite honestly, it is a risk on asset. So if we do get some overhead space cleared out where risk on assets are back in vogue again, so don't view Bitcoin right now as a hedge asset yet. And we found out that lesson back in 2008 with gold. Gold got chucked out in the trash with everything else when the markets dropped by 57%, but it was one of the first to rally up from there. So don't, again, back off, be patient, wait for this all to play out. And you don't have to, nobody gets a medal for the bottom tick.
Yep. Yeah, this was something we talked about on our Omnia call on Monday, which is this really silly notion that, oh, Bitcoin, well, it's not doing as well as gold right now, so it's not really a store of value. I don't really care about it being a store of value right now. It's clearly never been a store of value if you look at it, as being a non-volatile asset. It's the most volatile thing out there. What I care about is that it's an appreciator of asset value, or just an appreciator of value over time. That's all that matters right now, in my opinion. Is that even though there is some risk, a lot of risk, with Bitcoin, there's a lot of volatility. Does it appreciate more over a long term period than other assets, alternative assets, what have you? And if that's true, and I think it will be going forward, then yes, it's absolutely, I would say, a hedge long term. But if you look at it, if we look at like the daily charts and say, well, Bitcoin is doing better, or not doing as good as some of the other markets. Well, maybe it's a hedge, maybe it's a not. That's a It's just a silly, redundant argument that you're never going to get an answer to. But if you look at it more, does it hold or appreciate value over time? That's a more interesting conversation, in my opinion. So, yeah, it's people just
Yeah,
love.
guys, don't
Yeah,
don't get lost in the don't get lost in the minutia for right now, because again, cryptocurrency is going to be kind of swept up along with the momentum, whether or not it's to the upside or to the downside of much larger markets. There was something I learned a long time ago, 20 years ago, when I was trading, beginning with the stock market, and the order in the stock market was market, sector, stock. So you don't trade from the inside out and just focus exclusively on a stock. You focused on where the market itself is going, because 75% of the stocks out there will go in the direction of the market. And that's sort of what we have with Bitcoin as far as cryptocurrency. A lot of them will tag themselves along the hip with Bitcoin. So there's market, sector, stock. Sector would be like a group of like transports, or it could be oil services, or it could be technology. So those tend to move in a group as well too. And then the individual stock is going to be held hostage to the larger tiers above it. So think about that with anything that you trade, any risk asset that you have. Figure out where in the food chain that you are with that. Because right now, I hate to say it, but cryptocurrency is somewhere way down at the bottom of the food chain and is going to be subject to those much larger forces. So if you got people out there that are doing specific technical analysis on Bitcoin, and I'm one of them, right? So that's what I've been doing. But understand that it's going to be held hostage by the larger forces that are out there. So look macro first and then go down to the micro. Don't get so hemmed in on, unless you're day trading, unless you're just moving in 5-minute increments of things, then it doesn't really matter.
absolutely.
That's a long-winded way of saying, like, there's larger forces at play right now.
Which is
So
what
don't get
we've been saying that for the last year, guys. Everybody wants to say like, oh, the halving, oh, here comes all these things. Yeah, I mean that is a potential catalyst for stuff. But if if someone has told you that we're going to see this massive rally up to the halving, and it's going to be a new bull market and all this stuff, they've lied to you. It really, at this point, the Bitcoin market, everything, every market is interconnected right now.
Right.
It
More so than we've ever seen it in a long time.
Yes, yes,
Because fear has a way of bonding people together, doesn't it?
it certainly does. So yeah, I think that's what's more important for this space, and more important for your larger strategies overall, is to play to that and against it. And that's, finding that edge, finding that alpha in that environment. That is what is going to help you to, thrive in this sort of time of uncertainty and fear, and let you, come out of this stronger than and most people. So,
Yeah, don't be a turtle. Like expand your view,
absolutely.
and see what's going on with the macro.
Right.
But don't trust the media. Believe the price.
Yeah. Yeah. There's two circles in your life: the circle of concern, things like the weather, traffic, the economy. These are things we could be concerned about, but we have no control over. And the second circle is your circle of control, things you do have control over: how you learn, how you eat, how you exercise, how you spend your day, what you're investing in. These are things we can control, and that's what we should be looking at. So don't be concerned about things you have no possible control over. It just this seems to be what so many people do, but it's a fruitless exercise. Instead, spend your time honing your abilities and your strategies around things you can control, and things that you have the ability to better control going forward. Yeah. So, I mean, like, don't want to turn into some sage wisdom here, but that's what you have to look at when people are freaking out about things that they have very little control over. Be the rational voice and say, all right, what can I control, and how can I respond to that in a way that is going to be different than most other people. So
If you do the opposite of what everybody else is doing, then you can expect to get exceptional results versus the rest of everybody else.
yeah, yeah,
It's not easy though. It feels weird. It feels strange. It feels like you're different. It feels like you're an outsider. People are going to call you crazy, but that's what it feels like to do the right thing when it comes to trading risk assets.
yeah.
All right, everybody. I think we're I think the tank is empty. So
Yeah, yeah, yeah. Well, appreciate your guys' time, and hope
thanks for
the
hanging
rest of
out
the
with
week.
us today.
Yeah. We'll see you guys next week at 4 p.m. So, yeah, at 4 p.m. All these time changes, man. It's always getting to me.
Yeah,
But
we're on
yeah,
daylight savings time now.
yep, yep. But take it easy, guys. We'll talk soon. Cheers, guys.
You're standing on a landmine. Tread lightly, get ready to explode.